As of 10:42 a.m. Eastern Time on this Tuesday, October 28, 2025, shares of Lumen Technologies, ticker LUMN, are trading at $9.57. That's a gain of about 1.81% on the session, or 17 cents, with the stock showing significant strength after opening lower at $9.38. It's already traded over 10.6 million shares, putting it on pace for a very high-volume day, and it's pushing toward the session high of $9.67. Now, the immediate expectation when you see that move is that it's just noise, maybe a technical bounce in a long-forgotten telecom stock. But the reality is that the market is grappling with a profound, almost violent disconnect. We have a stock trading under $10 that many analysts, whose price targets are clustered way down around the $5 mark, had essentially left for dead. Yet this stock is up a staggering 86% in the last 90 days. The market is suddenly pricing Lumen not as a dying phone company, but as a critical piece of infrastructure for the entire artificial intelligence build-out. And this tension is the entire story. The common belief about Lumen, the company that used to be CenturyLink, is that it's a melting ice cube. It's a legacy business burdened with an enormous $18 billion debt pile, fighting against declining revenues in its old copper wire business segments. For years, the narrative has been about managing this decline, selling off assets, and trying to stay solvent. You'd look at the financials, see the negative net income and the 12% average annual revenue decline over the last 3 years, and you'd run. It's the kind of stock that traditional Fidelity Wealth Management advisors or automated Schwab Intelligent Portfolios might flag as high risk or a value trap. The expectation was a slow bleed toward irrelevance. But the reality of the last few weeks has completely shattered that expectation, forcing everyone to reevaluate what this company actually is. The entire landscape for this stock changed just last week, on October 23rd, with a single press release. Lumen announced a strategic partnership with Palantir, the data analytics and AI giant. This wasn't some minor software-as-a-service contract. This is a deep, strategic alliance valued at over $200 million. Palantir is integrating its artificial intelligence platform, or AIP, directly with Lumen's vast fiber optic network. The goal is to create an offering that allows large enterprises, think defense, finance, energy, to run complex AI models in real time, securely, and with minimal delay, using Lumen's Network-as-a-Service platform, or NaaS. The market immediately understood the implication. Lumen, with its massive existing fiber backbone, was no longer just a utility. It was presenting itself as the essential toll road, the physical highway system for the AI industry. This Palantir news is the spark that lit the recent fire, but the fuel has been building for months. This is the reality that momentum-focused traders, perhaps using the Robinhood app or SoFi Invest for their online investing, have latched onto. While analysts were focused on the declining legacy business, Lumen management has been executing a massive multi-billion-dollar pivot. Back on September 22nd, the company detailed its plan to become the trusted network for AI. This isn't just talk, it's a massive capital expenditure program. Lumen is accelerating its network expansion with plans to add 34 million new intercity fiber miles by the end of 2028. They're using next-generation fiber optic cable from Corning that can fit twice the fiber into existing conduit, dramatically increasing capacity. They're pushing 400 Gbps speeds across their network, covering over 97% of U.S. business locations. So you have to ask, why is this different from any other telecom build-out? It's because the demand is different. The kind of data loads required by NVIDIA stock-powered AI data centers, the real-time information needed for Tesla stock's autonomous driving fleet, or the cloud services that underpin Apple stock, all require a new level of network speed and security. Lumen is making the bet that its fiber is the picks and shovels of this new gold rush. They are positioning their network as the one that can move massive AI training models and real-time data securely and instantly. And the Palantir deal was the first major validation of that strategy. This is why the stock has decoupled from its old-world fundamentals. Traders on platforms like Interactive Brokers who look at options flow and market structure see a complete change in the narrative. They aren't buying the old phone company, they're buying a data infrastructure company that just partnered with one of the biggest names in AI. Of course, the $18 billion debt pile doesn't just disappear. This is the massive risk, the reality that bulls must contend with. That debt load is larger than the company's entire market cap. Management knows this. This is why they've been aggressively managing their capital structure. Just last month, on September 29th, Lumen announced it had successfully repriced $2.4 billion in loans, a move that saves them $24 million in annual interest expense. They also refinanced some extremely high-cost 10.75% notes, replacing them with new 7.000% notes, saving an additional $10 million a year. These moves are small compared to the total debt, but they are critical. They show financial discipline, and more importantly, they are designed to free up every possible dollar of capital to fund the AI network build-out. This is a high-stakes race against time. Can Lumen build its new high-growth AI network fast enough to offset the revenue decline from its legacy business, all before that debt load crushes it? This brings us to the most immediate catalyst, which will test this new narrative severely. Lumen is scheduled to report its third quarter 2025 earnings this Thursday, October 30th, after the market closes. The expectation, based on consensus estimates, is not pretty. Analysts are forecasting a loss of 31 cents per share. That's significantly worse than the 13-cent loss from the same quarter last year. They're also expecting total revenues of $3.04 billion, which would be another 5.5% decline year over year. This earnings report is going to be the ultimate test of expectation versus reality. If investors are only focused on these headline numbers, the stock could get hit hard. The legacy business is still the vast majority of the company's revenue, and that part of the story is still weak. This is not a stock for the faint of heart. It's a highly speculative investment, and not a place where someone looking for simple investment help should start their self-investing. However, the market, and especially those who have piled in over the last 90 days, will not be listening for the Q3 numbers. They will be listening for the future. The entire investment case hangs on the conference call. They want to hear about the AI pipeline. In Q2, management said they had a $9 billion pipeline for their private connectivity fabric deals. Has that number grown? They want to hear color on the Palantir partnership. How is it being rolled out? Are new customers already signing up? They want a progress report on the 34 million miles of fiber build-out. Are they on schedule? Is capital spending under control? If management can successfully sell that future, if they can convince Wall Street that the AI-driven reality is arriving faster than the legacy business is decaying, then the stock could very well shrug off a bad earnings print and continue its climb. This is the central conflict. The stock is trading at $9.57. The bulls, ignited by the Palantir deal, see a future where Lumen is the essential data backbone for AI, just as NVIDIA stock is the essential compute chip. They see a path for this stock to be multiples of its current price. The bears, looking at the $18 billion in debt, the negative net income, and the declining revenues, see a company in a death spiral. They see the analyst targets of $4.50 or $5 as generous. It's a classic battleground stock. This upcoming earnings report on October 30th is a major inflection point. This is why so many traders using Fidelity Investments mobile app or checking their Robinhood cash management accounts are watching this name. Speaking of which, earnings are coming on October 30th. Comment below with your earnings per share estimate. Do you think they will beat the consensus loss of 31 cents? So, to summarize where we are, the expectation that Lumen was just a dying telecom is now obsolete. The reality is that it's in the middle of an incredibly costly and high-stakes transformation to become the premier fiber network for the artificial intelligence industry. And the surge in its stock from near insolvency levels to over $9 is based on the belief in this transformation, a belief that was powerfully validated by the recent Palantir alliance. But this belief is about to run head-on